Good morning. So I have an appointment this morning at 8:30. The 9 o'clock candle is supposed to open though while I'm at my appointment. And then I'm supposed to be placing some trades. So I don't know if I'll be able to do that. I might have to see how the market has moved and possibly get into a trade as long as the market hasn't moved too far away from the initial entry. Or if it's moved, if I get in late but it's happened to, get into a better entry price, then that actually works out for my benefit. And sometimes that's how life rolls. So even in trading, you've got to be flexible. Either you just pass up on the day or you just adjust fire to whatever's going on. So hopefully all of the videos from here going forward should have this sort of layout here. One of my coworkers let me know that I didn't realize how close I was in some of these other videos, so you don't have to get any more of the surprises like these where I'm just right there in your face.
Where's the baby? There he is.
So yeah, it'll be good for you and me, actually. Let's get on the chart, see what's going on, see what trades I have open still, and then hopefully I'll go over some of my personal trades and start keeping up to date on that one as well. This is currently where I sit at on this paper trading account for the competition for TradingView. I have gold, West Texas oil, natural gas, and the 30 Dutch. Yeah, I don't even know how to pronounce it. Who cares? You can see what I see. So these are the 4 positions that I have right now. I don't know the math on them. We'll take a look once we actually get back to the chart. So let's go to the chart now. So SPX 500 made its way to take profit. I think that probably closed out last night. So we're good on that one. I just need to wait to see how things are going. Given this, however this looks like right now, I got an hour and a half. I mean, unless this 4-hour candle, I like how I had to do math. I looked at the clock, even though there is a countdown ticker thing right on the right hand side. So an hour and a half, hour and 40 minutes before this one closes. So price would really have to come down a little bit more to get me out of that indecision type candle. So we'll have to see how this one goes. The next one is the one I'm currently in. It is it's still just going. So hopefully we should have something before the end of the day where either it closes out or I don't know. All depends on how everything's going to work out. Next one is the JP225. Looks like we hit take profit on that one. We are roughly in the same situation as the SPX 500, where unless this candle actually does something a little bit different, I'm probably going to sit out of this one. There's not enough conviction of that candle to say yay or nay. So we shall see. Maybe a sell, depending. I mean, that'll be the closest. If somebody had to say, you know what, you have to place a trade on JP225 and it has to be either a buy or sell, make your choice. I think given that candle, if it closes this way right now, like if it closed right now, I would still lean more towards a sell. It would be nice if it could go a little bit further south and then close. That would be nice, but if I had to make a choice, it would be a sell. So we'll see how that plays out. Gold, currently in gold, and it is hovering. It looks like it's having a hard time making it beyond this resistance, which we had talked about before. It's like I'm asking a lot of gold to break these highs that it hasn't been able to break. Oh, is this forever? Oh, okay. Forever, I guess. We've never broken these highs? Okay. My bad. So, that's part of the little nuances and context that you'll start taking in. Is you're asking for gold to reach all-time new highs. Do you have anything to back that up, or are you just being hopeful? Because that's basically what it would be. It's like, oh, I hope gold's going to reach all-time new highs. Like, do I see anything here? I mean, we've created higher lows, but we've steadily just pummeled that resistance area. If this is the third time, the good thing about this is we seem to be stuck at this resistance level. The other 2 times it's come up here, it's rejected off and fell away. We haven't had that. So this is the third time we're up here. We have a bit of a different reaction. So I don't know. You know, it is my experience that price is either going to go up or going to go down. And so, I don't know, 50-50 shot. We'll see how it goes. Silver, moving on to silver. Silver stopped me out. What are we looking at? Same thing with the candle close, although this one's a little bit better. You've got a nice strong wick. The beauty about a candle like this, or in comparison to the other 2 that I'm unsure about, is it gives a little bit of breathing room for that stop loss. So if price doesn't really know what it wants to do, but it wants to channel a little bit more before it decides to go down, because that would be the hope here, is that it would go down once you got into this trade. It gives it a little bit more breathing room for the market to do that. Whereas if it's a small indecision candle and you're only using, like me, I'm only using the stop loss of that extreme high or low, depending on if you're buying or selling, of that previous candle, well, that's, you know, you don't have a lot of wiggle room. So even if price was to just hiccup before going in the original direction, then you would get knocked out. I think we've seen something like that in, is that one close? JP, come on. Okay, neither one of these was pretty close with the last trade, where it was like, yeah, it was barely any breathing room. Actually, if I would have done a little bit closer to that bullish candle, then we might have gotten tapped out on that big bullish candle when it finally came down. But, you know, so we have stuff like that you just got to watch out for. So I like the way that it's sort of closing. We'll see if we can get a stronger close and then get into that one. And then, oh, looks like oil's going to go down and and break. We talked about this one as well. It's like we were at the resistance. I'm asking oil to go ahead and break this resistance and go. Given it's already over, like it's from the middle of the screen all the way to where current price is right now. That is almost a vertical line, at least in regards to how a chart pattern or how a market moves. That's almost a vertical line. And I was asking to go a little bit farther. So it's like context, things like that. Should you expect price to continue going that direction? No. So this could be a loss that we could have avoided. Natural gas, it's actually hovering around break even. So we'll be in this one for a little while unless price does something drastic. So that is currently the trades for the TradingView challenge. So that's where that sits. So if you're only interested in the competition, well then by all means you can actually leave now and then we'll be good to go. I'm gonna go look at what my trades are doing. I'm gonna try to, so I've taken up hedging and I've talked about the Forex hedging channel. I'll hopefully link a comment. I'll hopefully link the channel in the bio if I remember to do it. But he's where I've gotten this idea from in regards to how to manage a hedge creatively, and which is it's interesting because okay, so you know I follow Nick, love Nick. Nick always talks about being creative in your trading and finding ways to manage risk creatively. You know, he does DCAing, hedging, things like that in order to manage risk. You know, he'll take profits from another trade to offset the loss of another. He was doing hedging for a while, and I was following him back when we were doing hedging. I mean, I follow him now still, but I was following him when we were doing hedging, and I was doing really, really, really well at that. The only problem is, and he pointed out as well, is you end up getting into some exponential drawdown if you get into a trade and the market just continues going against you, and you're closing the hedge at a particular level that you think price is going to bounce at, but then it doesn't. You get back into that hedge again. Your original position is now double in the loss of position, plus your second position that you just got in is now 1R in loss. So you went from 1R risk to 3R risk like that. And then if it continues going against you, then, you know, you're sort of stuck with that, and you can really blow an account that way. And so I hit a streak like that, and I was like, oh my goodness, how am I ever going to get out of this hedge? And it was just so much. The original hedging process brought me so much peace and assurance that I didn't need to be right. Like, even if I'm wrong, you know, 3 times in a row, there's a good chance that I would be able to make it out in either a small profit or break even. And that was like, oh, this is great. That instance, that I had a few instances where price just kept going up against me, and I just kept getting hedged after hedged after hedge. The stress from that and the drawdown from that was way too much, and I had to back away from it. And I was like, I can't. Psychologically, I couldn't handle it. And anybody who's trying to get into this field, psychology is where it's at. Like, if you cannot handle the mental aspect of this, it doesn't matter if you have all the correct technicals, fundamentals, mixture of both. It does not matter whatsoever. If you can't handle psychology, your emotions are going to get you to dictate your responses and your choices, and you're just going to be done. You're just going to be done. And if for anybody who's like, I don't need psychology, if I can get all this other stuff, that's an algo, because an algorithm has no emotion. It has no psychology tied to it. It's just straight a flow diagram. If this happens, then this. If this happens, then this. Well, if algos worked as well as we would hope they would work, then, I mean, a lot of people would be doing algos, but I have a feeling that if anybody's found an algo that works, they're keeping it to themselves because it makes them a lot of money. Why do they need to do anything other than that? And yeah, I understand people, multiple streams of income. They want to sell you the algo so that you can get, like, why? Why? No, just expand on what you're doing. Why? Like, that doesn't make any sense to me. Other areas where, you know, it is a little bit more subjective, multiple streams of income make sense, because on your down days, you're still getting income. But if the algo is always, you know, is successful long term, like, no. But whatever, who cares? We won't talk about that. I just don't see it happening. I don't. And majority of the reason I don't see an algo working long-term successful without any sort of tweaks and whatever, so you'll constantly be paying somebody else in order to do it in hopes that it works long-term, is the fact that there is the human element, a lot of human element in trading. And so in order to remove the human element, you'd have to get everybody to go algos. And well, I just don't see that happening. So psychology is a big deal. Hedging worked out great for a little while until I hit the big drawdown. I actually don't know his name. Wait, no, I did know his name. It slipped me now that I'm trying to say it. The Forex Hedging channel, he found a creative way to manage hedges and drawdowns and things of that nature, and basically just rethink drawdown as just operating capital, which is a beautiful analogy. He's used the analogy a few different times, but one of which is if you're opening up a restaurant, a burger joint, you know, you have to put in money to buy your buns, to buy your condiments, to buy all this stuff. That's your operating capital. You need that in order to continue going forward in hopes that you're going to be selling some burgers. Same thing here. You have the drawdown, you have the money in the market, that is there in hopes in the future you're going to make some money from it. And so you'll always have money in the market. And so I like that idea. I like that because, I mean, it makes sense. And his thing is like, drawdown, like drawdown's fine. If you're in the whole point of trading is to get into the market and try to find successful trades that you can pull profits out of, and then turn right back around and get into the market and try to do that again. And so it's like, I like this idea and I like the way that he handles hedging. And so I am working through that as well. Now, with anything that I've ever done, I am not good at doing demo money. And if you followed anything on the competition, you understand it's like, oh no, this one's in drawdown. Yeah, I don't even look at, like, what is it, $700 in drawdown, $1,200 in drawdown? Like, if that was my real money, I would have a little bit more tie to it than I do on this demo account. Never did the, like, Texas Hold'em fake money stuff. It's like, no, people, you operate differently when it's actual money versus when it's fake money. And so I always jumped in, feet first, whether it's $100, $200, $500, whatever. Whatever I'm willing to lose, I'm going to throw in the market because I want it to actually hurt if I lose. Generally, you learn from pain. You learn from uncomfort. So, same thing here. I jumped into the hedging the way the Forex hedger did it, and I worked through some things and ended up getting hedged at like 120 pips apart at like, I won't say full margin, it was full capacity of what I was willing to put in for USD CAD. So it was like one lot on USD CAD, and both of them were like 100 something pips apart. And the swap fees and everything like that just seemed like, oh my goodness, am I ever going to get out of it? And so there was a couple key features of watching the videos, repeatedly. Like, I've watched them a few different times, but as you watch them, some of that information didn't stick until you actually got into it and into practice, which is why if you're looking to get into that, you need to get into the market and actually place trades and practice, whether that's demo or a live account. Not financial advice. I'm just saying you have to get in the market and do it. You have to get on the bike in order to figure out what you need to work on in order to be successful. So there was a couple of things that, he had said that it didn't make any sense to me until I got in the market, read it again or watched it again. And it was like, okay, never add to the outside of the hedges. Don't do it. You're going to get yourself in a whole lot of trouble. And that's what I did. And guess what? I wasn't in a whole lot of trouble. I was definitely uncomfortable. I'm like, okay, lesson learned there. Now can I do anything with this? Do I just need to cut my losses and start over, or what? And then one of the other things he talked about was FX replay. Not sponsored there. I just did the 3-day trial. I think at the time that he was talking about it, you could get it for 30 days. I guess they've nixed that and it's now down to 3 days. You can do FX replay. It bolts onto TradingView, so you get the TradingView charts, but it has a whole lot of data to it. And you can get in there and you can play. You can trade as if you were trading live. So it's like back testing, but with a whole lot. It seems to be a whole lot more. You get more tick data than you do on TradingView's back testing, and you actually get the fluctuations of the markets versus the full candle closures on TradingView. That's one thing that TradingView is kind of not good on that in regards to like placing trades in back testing. It only does it based upon candle closures and things of that nature. So wicks, if a wick came to your take profit and wick through, like, it just wouldn't register that was a take profit. It has to close on the other side. So it's like, that's one thing that's different. So where was I going with that? He said practice. You need to get in. And he's like, I pay for it. I do it every now and then when I don't have anything going on. I'll go and back test. He talks about it in regards to golf. He's like, it's like going out to the driving range. You just want to practice with that 9-iron to see how far you can hit. Some people can hit farther than others, but you can gauge yourself. And so I'm like, okay, cool. Let me see. I'm going to go to a random point in time, and I'm going to get myself into the same scenario that I'm currently in with USD CAD. And I'm going to see if I can work myself out, because that's basically work myself out of the hedge. It's basically what he says. Sometimes it just takes time to work the hedge out, and you gotta trim, you gotta buy back in, you gotta do all this other stuff. And I'm like, okay, fine, let me try that. 2 days. It took me 2, if not all 3. No, 2 days, because I still had it until yesterday at 6 p.m. and I had done and finished the night before. So 2 days. It took me 2 full days of working through on my little free time of working the hedge, trimming, and all this other stuff. If hedging is something that you're into, I highly recommend looking at this guy, even if it's just a different tool that you can put in your tool bag for future use. If you're doing hedging and it's already working great for you, great. But if you ran into the same issues that I did, then go look at this guy. So I worked through $2,000 account, 1 lot on USD CAD, hedged between, 100 and something pips in $900 drawdown, and started working it. Just started going through and doing it. And for a little while, it was like, oh my goodness, I'm never going to be able to do anything with this. It's not going to happen. And then slowly and surely, I got to see things get chipped away as the market moved in certain directions, and I was able to trim and take out profit. And so all along the way, you're taking out small profits and you're applying the rest of it to, and it's this beautiful way of getting out of a hedge. It's really, really, like, I would say genius, but it's not like rocket science, so it's okay. It's not overly complicated. It's actually pretty simple. All in all, I think it took me 183 days of actual chart time doing the 4-hour chart, where the 4-hour 4-hour time frame, which is where I'm at right now. It took me 183 days, and after all was said and done, I was going until I could get flat, which was me completely and totally out of the market. Granted, that is not the goal. The goal is to make money, not to go flat, and that's his thing. The goal is to make money, not to go flat, because you're always looking for the next opportunity anyway. So getting out doesn't mean anything. If you're not in the market, you're not making any money. You're not losing any money. But in hedging, the hedging process that he goes through, you're not trying to lose money anyway. So it's all about mitigating your risk. And so it's a great risk management tool if you can get behind the concept. Not hard concept. It just takes application. So after 180 something days, I was able to get out. The $2,000 account had $4,000 of profit, so it was sitting at like $6,300 something dollars. And I'm like, okay, that's it. I can get out. It's doable. I've seen it. I've worked it myself. It's not that I saw it. I worked it myself. In my head, I'm like, okay, well, what about swap fees? And I'm like, okay, look, even if for some strange reason, I don't see it, but even if swap fees were half of the profits, I would still be up $2,000. It's going to take some time, but I can do it. And so, the Forex Hedger hasn't been on in a while, and I pray that everything's good with him and his family and whatnot. At some point in time, he was talking about getting off YouTube because maybe YouTube's not his thing. I hope he comes back because he had great content. It was very informative, and I know I enjoyed looking at it and finding success with it. And so if he doesn't come back, even if he does come back, I think I'm going to pick up the mantle and run with it. I think I'm going to pick up tracking my trades and hopefully get into some sort of rhythm that he had in updating how that process is going. That way you could learn from two sources. You can learn from him, and you can learn from whatever I go through. And so right now I have, me being greedy, I have 3 different instruments that I am trading the hedging strategy with: USD CAD, which I'm in a full lot with across that one. That's what I gave for room there. GJ, which he recommended nobody trade unless you can readjust the thing, in which case I think I have that down. I'm trading GJ on, it's roughly the 5-minute time frame, although you can technically look at the 4-hour time frame. But and then I'm trading, I think, odd USD. And I realized my issue when I had these original 3 there is odd USD and USD CAD, because the USDs are the 2 correlating pairs there, or the same pair on both of those, that if I get hedged in one going one direction, I could possibly get hedged in the other. So I'm trying to work my way out of the odd USD and get completely flat on that one, and then grab something different, like an NZD CHF or something like that. So I have 4 pairs that I would like to get started with doing this. I do want to increase my capital in there. That way I have more margin to work with, although I think my margin's pretty tight right now. I'm not tight, but I think it's pretty safe right now. I'm doing 0.20 for GJ, 0.20 for USD CAD, or not USD CAD, for odd USD. I would like to be able to decrease the USD CAD, maybe like 0.5, and then bring in another one. And so I have 4 that I'm trying to work at, and then all 4 of them won't be correlated. So it'll be USD CAD, GJ, NZD CHF, and I think there's another one where none of them are linked together. Like, it's the 8 separate pairs are there. Yeah, you could look and go, well, odd and NZD, they sometimes, yeah, sure, okay, cool. So does the euro and the GBP. But they're also different enough that I should be just fine. We'll see. If not, it's just hedging. So it's just about patience and working it out. So I'm okay with that. Let's go look at those charts. All right, so the first one we have is USD CAD. And as you can tell, this is what I'm talking about. It's about $950 in drawdown. It might be a little bit more now, but originally, this is roughly what I started with. I've trimmed out a little bit here, but then it immediately got hedged again. And look at that. Like, it's just right down there to the level. And I know, you're looking at that and it's like, well, why did you have that hedge directly in the support area? Well, it was down below the support area, and then as price moved up, I was trailing it with it, and then price came back and tagged it, and now it looks like it might take off from here. So, I'm still working out whether or not I want to trail it like that, and try to cut down on the drawdown, or if I should just let it breathe. Sometimes letting it breathe has worked out well. Sometimes trailing it has worked out well. So it's like, it's hit or miss. But all in all, it's less concerned because I've seen some progress on this. So this is pretty nice. So that's USD CAD. Plenty of room between the two. But I'm hoping to get it knocked out soon. And then, so let's move to the next one. Odd USD, that's the other one that I was telling you about. So currently, I do have some distance between these ones too, but I'm working the inside of the hedge right now. I have a pending 0.08 that as price continues to move down, if it moves down away from this, I'll continue drawing it down. And I'm just hoping that price is going to fall away from here, give a nice strong push away, and be able to get down here, take out one of these positions, and then get into another. And then GJ, like I said, is mostly on the 5-minute, using the 4-hour 5-minute. I was going to try the 2 candle theory with this guy and see how that worked. And then I added a few other confluences here, like an engulfing bar, higher high, higher close, lower low, lower close, or a 3-bar reversal. I haven't actually like really dug into that yet. But currently, that's where we sit. So no biggie there. We'll see how everything goes. And then, well, okay, so those are the other one. Oh, NZD USD. Oh, I didn't realize I was in this one too. Okay, my bad. Yep, same thing here. it's fallen off. Now I just need to continue going, and then I'll start trimming it and be good to go. Euro AUD is one of the ones I want to get into, and then NZD CHF. So those are the two. I want to clear two of them up and then get with those ones. So that'll be that. All right, so I got an alert to squeeze this trade here. As we can see, price has moved down about so far down that way. So I'm going to squeeze it about 30 pips right there. That'll put me at 66256-ish. So I'm going to move this 0.8 position. I'm going to have to turn the phone sideways, so deal with me. 6256 is where I need to go from 66600. So 6256 for odd USD. And then we'll come here, open up MT4, odd USD, wait for this to catch up, modify order. Was it 6256? Modify, done. oh, it's freaking out on me. Yep, 6256. So we have done that now. I'll continue moving this down. And basically, if price is to just continue falling off, let me adjust this as well. That's sort of important. 6256. So as price continues to flush off, I'll continue just squeezing that on down, and we'll see where everything goes. So doing a follow-up on all my trades today, and it looks like I'm only currently in two. I have natural gas, which is still hoping, looks like it might still make its way up. West Texas oil has hit stop loss. Silver has hit stop loss as well. Gold has hit stop loss as well. JP, I don't know if that, I think that hit take profit earlier, but I wasn't able to get into a trade then. And then we're sitting at, what is it, the DE30. Hopefully we'll go up and hit take profit. And SPX 500 hit take profit as well. So those are the trades. I am currently only in two. Let's see if we can take a look at them. There's the two, sitting at $800 floating profit. Equity or balance is 252,000, so still above the break-even mark. We'll see what happens tomorrow. See if these guys close out, or I don't know, maybe they'll turn around and tag me out. Either way, I think if I lost them both, I'd probably be looking about $1,200 in loss, which still means $1,400 up in the account. So still better than a majority of traders. So yeah, we'll have to see how everything goes, but basically I'm above break even, so that's a good start. We're only what, day 9, day 10 in, so I still got some to go. No problem. We'll see how it ends. I'm not really too concerned. I really think that this is going to work. Why? Because majority of stuff in trading works. It's all about managing your risk. Part of managing your risk is managing your emotions, your discipline, your consistency, things of that nature. Trading as just like to place a trade, really, really simple. We try to overcomplicate it. And so hopefully this will show you can actually make it really, really simple and find ways to be profitable without complicating it.